Everyone is preparing for a recession in 2026. Analysts are warning about tariffs, consumers are tapped out, and the headlines are getting darker every week. But here's the problem: the actual data is telling a completely different story. This is weekly GDP growth for the United States, and this is same store retail sales. Both are accelerating, not contracting. So either the entire market is wrong, or we're looking at the wrong signals. Let me show you what's really happening beneath the surface. The narrative around a 2026 recession started building late last year. When the Liberation Day tariffs were announced in April, the consensus was immediate. This would crush consumer demand and slow the economy to a halt. Investors panicked. They moved into cash and defensive assets, assuming the worst was inevitable. But when you zoom out and look at the actual weekly data, not the headlines, not the sentiment surveys, but the hard numbers, the US economy entered 2026 in remarkably strong shape. Why does this matter? Because if the recession thesis is wrong, then the entire positioning in markets right now is based on a false premise, and that creates opportunity. Let's start with GDP. Most people look at quarterly GDP releases, which come out months after the fact. But there are real-time proxies that tell us what's happening now. Notice the trend through December 2025 into January 2026. It's not rolling over. In fact, it's been accelerating since October. Why? Three reasons. First, corporate spending never slowed. Companies that were worried about tariffs front-loaded their purchases in the fourth quarter, which boosted manufacturing and logistics data. Second, the labor market stayed tight. Wage growth continued at 4 to 5%, which meant consumers had more disposable income than the bears expected. Third, and this is the chart everyone is ignoring, foreign capital inflows. Despite all the political noise around Liberation Day and tariff threats, foreign investors bought more US assets in 2025 than they did in 2024. Look at this. Net foreign purchases of US equities, bonds, and real estate increased year over year. That is not the behavior of investors who think the US economy is about to collapse. What's happening here is a classic flight to quality trade. Europe is stagnating, China is deleveraging, and emerging markets are dealing with currency crises. The US, for all its problems, is still the cleanest shirt in a dirty laundry basket. And when foreign capital flows in, it creates a positive feedback loop: a stronger dollar, lower import costs, and higher corporate margins. That is the opposite of a recession spiral. The final piece of evidence is same-store retail sales. This measures sales at stores that have been open for at least a year, filtering out the noise of new openings. The trend is clear: consumers are still spending. Sales growth accelerated in Q4 2025 and carried that momentum right into January. Now here's where it gets interesting. If you talk to most people, they'll tell you they feel like they can't afford anything. The media keeps talking about inflation making everything unaffordable. But the data shows something different. Real wage growth, wages adjusted for inflation, has been positive for the past 18 months. People are earning more than prices are rising, which means purchasing power is actually expanding. The disconnect is psychological. Prices are higher than 2019, and we remember that. But our paychecks are higher too, and we forget that part. So where does this leave us? The market is priced for a recession that isn't showing up in the data. That doesn't mean a recession can't happen. Geopolitics are always a wild card. But right now, the recession trade, being long bonds, hiding in defensive stocks, sitting in cash, is getting very crowded. And if the economy keeps running this hot, that trade is going to unwind painfully. The question you have to ask yourself is, are you positioning your portfolio based on the headlines or the data? I track weekly indicators every morning to spot these divergences before the news does. Subscribe to this channel for more insights. Thanks for watching. See you next week.